basically, if we do end up using Bitcoin as money, it is overwhelmingly likely that the principles guiding financial intermediation just will be Islamic.
A lot of people think Islamic finance is basically financing without interest, because interest or usury or what we call riba is impermissible. And there's good, social reasons for that, which we can trace to many religions. Christianity, for example, there's the famous case of Jesus in the Temple of Herod overthrowing the tables of the money changers, because, of course, the money changers were devaluing the currency that the pilgrims were using. But where we get this concept that interest is haram or impermissible is actually from the fundamental principles, which is that there should be no injustice in financial dealings. It's about having just trade between two counterparties where they are partners, where they don't have an asymmetric relationship as borrower-lender. Frankly, countries around the world right now, a huge part of the world, let's kind of broadly call it the global south, is expending almost half its GDP on servicing the interest payments to, Western banks and the IMF and the World Bank, rather than their healthcare sector or sanitation or roads or railways. And that is all a function of money that is easily created from the act of lending in the first place. So riba, interest, money creation, these are all intrinsically tied up. And Islamic finance naturally falls out of a Bitcoin standard. It's just good business. It's just ethical. It's just based on a sound and healthy economic practice.
Welcome back to the Block Space podcast. I've got Alan Farrington and Harris Irfa on the show, co-authors of Bitcoin, Fiat and Islamic Finance, an economic, ethical, and historical analysis of sound money in the context of Islamic teachings. Alan, Harris, welcome to the show.
Thanks very much, Charles.
Thanks for having us.
So let's get some quick intros from you guys. Not everybody knows who you are. You both come from finance, but interesting financial trajectories. Alan, what's your story?
Sure, I'll keep it pretty short. So I worked in asset management for about 7 years for a pretty large public equities manager. In normie speak, that means my job was to think about whether companies were good investments or not. And then about 3.5 years ago, I left to start Axiom, which is what this logo is on my cap. You've made it when you've got your own merch. Axiom is a venture firm that focuses on investing in companies building in the Bitcoin space. I change the slogan pretty much every time I say it, because our dream is effectively that, eventually that description doesn't make any sense because every company is using Bitcoin and we're just a venture firm. But that's kind of our edge, that we think we understand Bitcoin. And also, as I'm sure we'll get into, maybe not right away, but later in the discussion, I'm one of the co-founders of and CEO of a company called Flux, which is very similar to Axiom in the sense of providing financing, let's say, for Bitcoin companies, but with the neat difference that all of the financing is in Bitcoin. And so we mentioned that once or twice in the paper. So I'm crossing my fingers. It comes up again.
Author of a number of hits of Bitcoin literature too. Harris, what's your story? How did you get into the Bitcoin and finance world?
So my background from my sins is I'm an investment banker, or a former investment banker. I was with Deutsche Bank and then Barclays. And about 20 years ago, I co-founded the Islamic finance team, actually going back 25 years at Deutsche Bank. I was in Dubai at the time, just around the time that they started the new International Financial Center, the DIFC. So it was a great time to be in the region because things were just taking off. And we found that our clients were very happy that Deutsche Bank had arrived on the scene, but they were saying, well, can you do these deals on a Sharia-compliant basis? And I basically learned Islamic finance at the feet of one of the major scholars, the theologians, who issue religious edicts and legal opinions on whether a particular type of financial structure is in compliance with the ethics of the faith. And so that was a very formative time for me. I moved on to Barclays and then eventually left the investment banking industry about, I would say, 8 years ago, set up on my own. I'm the CEO and co-founder of a company called Cordoba Capital Markets, CCM. And I think what we do is pretty unique. There is a type of financial instrument in the Islamic finance world called a Sukuk, which means an Islamic bond. So essentially the idea is that you take a real economic trade activity and you securitize it. And then the investors earn the returns from the performance of that underlying asset. Of course, the Sukuk industry has ended up becoming a bond-like industry in that there's essentially a guaranteed return with a coupon, which looks almost identical, if not identical, to an interest rate. And we wanted to go back to the roots of what we call prophetic economics, which is real trade, real financial products that are underpinned by something real taking place. So that's what we do.
Let's go back to that, Harris. Let's start out. You guys both kind of preface the report with kind of where you come from and why you're even writing the report. And Harris, you kind of opened by saying that the current fiat money creation regime and this concept of Islamic finance are incompatible. You say Islamic banking is an oxymoron. At a high level, without getting too into it, because the audience, again, is probably Western, you'll have to handhold me through some of the terms and concepts. But how did you come to this conclusion after decades inside the finance and banking industry?
People tell me, why didn't you leave sooner? That's a fair argument. So let's talk about this concept of Islamic banking being an oxymoron. So a lot of people think Islamic finance is basically financing without interest, because interest or usury or what we call riba is impermissible. And there's good, social reasons for that, which we can trace to many religions. Christianity, for example, there's the famous case of Jesus in the temple of Herod overthrowing the tables of the money changers, because, of course, the money changers were devaluing the currency that the pilgrims were using. And that's a form of debasement and therefore a form of usury. And Islam, too, has been very anti-riba, anti-usury. But where we get this concept that interest is haram or impermissible is actually from the fundamental principles, which is that there should be no injustice in financial dealings. And so actually, if we go back to the roots of prophetic economics, it's about having just trade between two counterparties where they are partners, where they don't have an asymmetric relationship as borrower-lender, because that creates a lot of, inequalities and injustices in society. So that's the starting point. And actually, if we look at what the banking industry does, and I often use the term fractional reserve banking, whether you're conventional or whether you're Islamic, you're in the business of money creation. 97% of all money circulating in the UK economy, and I imagine also the US economy, is created by the private sector banks through the act of lending. So this is crazy. This is actually a type of fraud that's taking place. You deposit $1 or a pound in a bank, and that bank magically creates 10 or 20 new dollars or pounds, which come from nothing. So if riba was meant to be an injunction against the creation of money on money, surely the creation of money out of nothing is even worse. That's an even worse injustice. So Islamic banks being fractional reserve institutions, because they have to follow the rules of the central bank and the government, they too must create money from nothing, even though they overlay on top of this base these halal or compliant contractual structures, which are supposed to be risk sharing. But you can't be risk sharing if you're creating money from nothing. So that's why eventually I concluded, probably far too late, that I couldn't continue in good conscience, continue to work in the Islamic banking industry. And I needed to try and go back to first principles on my own.
And Alan, you preface the report and you have a really interesting angle here. You say something akin to like that you think Islamic finance will naturally emerge on top of Bitcoin. Mm-hmm. Explain this.
Okay, for the entire rest of the show.
Well, we'll double triple tap on it, but maybe
sure.
Give me a little intro on this.
Probably the easiest way of explaining how I came to think this, like why I think this in the first place, would be most easily understood with a similar background to Harris, the kind of how I even arrived at this subject. Which was, this is an interesting story that I don't think I've ever actually told before. I'm not even sure Harris knows this now I think about it. So sorry, I'm gonna embarrass you a little bit, Harris, in a good way. But many years ago, well before Axiom, actually before writing Bitcoin is Venice, which you alluded to, Charlie, and actually ended up featuring as part of the original essay, never mind even the book. It's a long time ago. I was chatting to Saifuddin Ammous, who I'm sure your audience will be aware of. And at that point, I had begun a decent amount of research into economic history that formed a lot of the kind of theoretical backbone of Bitcoin is Venice, which people have read it should hopefully make sense to them. And recognizing, for example, that almost all, if not actually, frankly, just all of the financing structures that were used in, call it early Renaissance, primarily Northern Italy and the Low Countries. So basically where what we now call capitalism sort of traces its roots. They just have nothing whatsoever to do with what we're used to today. They're completely different structures. I was first interested in this because my hunch, which I think I'm very happy with having had this hunch, it's been very productive, but was that probably the reason they were so different was because they used gold, right? They effectively didn't have fractional reserve. They certainly didn't have anything remotely resembling fiat. And so I was discussing this with Saif, and he said, I don't remember the exact words he used, but basically, yeah, you need to look into Islamic finance. And I had no idea what that meant. So I said, okay, well, what does that mean? How does one even do this? And he pointed me to a few places. And one of those was Harris's book. So, which, Harris, you didn't mention, but you really have to mention this when you're introducing yourself, that Harris wrote this amazing book called Heaven's Bankers, which I think it's fair to say, Harris wouldn't say this himself, but I think it's by far the best English language introduction to just the entire concept of Islamic finance. And so there was a couple of things that I read, but this one, obviously, I loved. I've recommended it to many, many people, including obviously citing it in Bitcoin is Venice. To get back to your question, having then read that and having internalized these principles, which to be completely clear, I'm not remotely an expert on. Like Harris is, I'm kind of the Bitcoin side of the equation in all of this. Everything just felt like it clicked into place. And I went back to Saif and, said, thank you. Like, I get it now. I see why you told me to do this. And that's what I think is so fascinating. And I think is definitely something that we tried to carry through into writing this report that we hope will resonate with a lot of other people too. Whether they're coming, it's kind of an interesting contrast between the two of us, whether they're coming from the Bitcoin side, like I am, or from the Islamic side, like Harris was initially, at least, that you just recognize this kind of obvious relationship, this almost kinship in a way, that exactly what had piqued my interest about how very, very early capitalism was developing in Venice, which seemingly has nothing to do with either Islam or Bitcoin, actually led very, very cleanly to this recognition that if we are to, let's call it hyper Bitcoinized, right? Not to be overly dramatic about it, but basically if we do end up using Bitcoin as money, it is overwhelmingly likely that the principles guiding financial intermediation to whatever extent it's needed and exists just will be Islamic. And that to me is fascinating. So that's kind of the whistle stop tour of why I ended up so interested in this.
So Harris, let's attempt to try to understand some of the basic tenets of Islamic finance. You do outlay them. It's deeply complex, and it leads us towards, like, again, simple but nuanced concepts like Riba. How outlay for me, like, how the tenets of Islamic finance work and how you think about them.
So it's interesting that the industry today has made it appear very complex, but it's actually very simple because it's all real economy based, it's all trade based, and it's risk sharing, right? Risk should be apportioned to the parties who can best manage it. So, the modern banking industry is sort of the Goodfellas model, right? The Goodfellas MBA, which is F you pay me, right? Your house burnt down, F you pay me. Oh, your wife got cancer, F you pay me. They don't care. So the Islamic model is a lot simpler. It's, there's a trade-based activity taking place. You're financing that trade. And we as partners, the investors, are going to share in the profits or losses of that trade. That's how it should work. Of course, Islamic banks today don't operate in that way. They operate in a very complex way. They operate according to fractional reserve banking. They operate under the central bank rules. And they've come up with very complex smoke and mirrors techniques to reverse engineer conventional debt. So they're just a perpetuation of modern financialization, which is the perpetuation of financial goods and services through debt, the proliferation of debt and the printing of money. So they're really contributing to the problem, not solving the problem. And actually, Islamic finance is all about finding an underlying trade and then investing that underlying trade. And it's really that simple. So there's no fixed rate of interest that's charged on a trade. There's no way that an investor can earn come hell or high water, the Goodfellas model. And they have to participate. And that actually leads to a much healthier relationship between investors and investees in an economy. It's socially beneficial. We all grow together. And we're incentivized to choose good projects, good ventures to invest into. Whereas the current model is you throw 20 darts at a dartboard and hope one of them sticks. So you're just throwing, money after bad ventures. And that isn't the way a healthy economy should be working. And I fear that we're heading towards a big reset. And that reset is going to hopefully usher in a new era of a sound form of money that incentivizes us to have low time preference and to invest money into good projects, which is exactly what Alan's company does.
And double tapping on this, the concept of riba or interest, again, is simple, but you expand on saying that, like, structurally, a system which relies on money creation kind of naturally embeds riba into it. I might be oversimplifying that. Expand on this concept. You write a lot about this.
Yeah. Look, I mean, if you have a sound form of money, whether that's the gold standard, whether that's a Bitcoin standard, of course, it's perfectly possible that human beings are greedy, right? They will lend at interest and they will try and create paper money on top of the underlying commodity money. That's just a natural human reaction. But it's a lot harder to do so when there is effort put into extracting that form of money, whether that's getting picks and shovels and diggers and companies that mine gold out of the ground, making it a costly and energy intensive process, or whether that's, using Bitcoin mining rigs and expending energy in order to extract Bitcoin. So, this proof of work is a means of curbing that human need to create money out of money. It's much harder to do so. So you'll never completely eliminate riba by having a sound money standard, but you'll certainly, I hope, deleverage the world economy in some way and remove this sort of cancerous growth of interest that frankly, countries around the world right now, a huge part of the world, let's kind of broadly call it the global south, is expending almost half its GDP on servicing the interest payments to, Western banks and the IMF and the World Bank, rather than their healthcare sector or sanitation or roads or railways. This is a huge drain on the developing world, and that is all a function of riba and money that is easily created from the act of lending in the first place. So riba, interest, money creation, these are all intrinsically tied up.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
We've seen in recent years, I'll throw this question to Alan, a lot of the Muslim nation states, the UAE in particular, have invested significantly into mining. Like, you see a lot of embracing of Bitcoin, at least the industry of it, by these nation states. But I'm not really sure if that's coincidental, like if that's because it's a profitable venture, or if that's because Islamic finance tends to match or map well onto Bitcoin. Alan, what's your take on this? Why is this happening? And what are your thoughts?
Yeah, that's really interesting. I'm not sure I have a particularly well-formed view on it. I'll maybe leave it to Harris. I'm not sure if he's thought more about, the direct implications to mining of the Islamic finance lens. It's not something that we directly address. We discussed exactly what Harris just mentioned in terms of the virtue of proof of work. Mining, I think, is a little bit downstream of that. I mean, in terms of various Middle Eastern countries' embrace of Bitcoin mining, to be honest, I would actually probably put it down to something a little bit different, which I'll cover pretty quickly because I don't want to get too far off topic, which is that by and large, they are, I guess, disproportionately skewed towards energy industries and energy extraction in the first place, which gives, I mean, this is a bit of a crass generalization, but I do think there's some truth to it, that gives them a much more kind of grounded economic outlook. It's, the base of their economy is more rooted in physical reality, as opposed to, again, bit of a crass generalization, but the stereotype of the West, or I guess the US, certainly the UK, as particular examples of being very kind of finance oriented and hence dealing primarily in abstractions and not physical reality. And honestly, I think that as a starting point is extremely helpful to just appreciate mining, because mining is effectively monetization of energy resources, or at the very least incremental healthy monetization of energy resources. If you are either heavily dependent on energy in a kind of an aggregate sense, or even at the level of the people making the decisions, if you're operating with the real world, like physical reality, if your economic success or failure is dependent on physical reality, you're much more likely to recognize the benefits of mining. And I think, if anything, again, not to go too far off topic, but all of the kind of classic FUD around mining that more seasoned Bitcoiners just roll their eyes at and don't even want to engage with seriously anymore because it's like 5-6 years out of date, that's you're much more susceptible to that if you just deal in concepts all day long. So I that's my best guess as to where it comes from. Harris may have a more sophisticated take to tie it to Islamic finance without forcing it.
I don't think it's necessarily a more sophisticated take. I think the Gulf states particularly are quite transactional, and I don't think they're necessarily idealistic. So if you drive around Abu Dhabi and you see Bitcoin mining rigs, it's not necessarily because the government or a sovereign wealth fund suddenly decided that there's a great alignment here between Islamic values and Bitcoin. It's just, they can make money out of this, and that's what their sovereign wealth funds do. There's very recently been a trend by the sovereign wealth funds that I hear under the on the grapevine, very much not a publicly known knowledge at the moment, which is that they're looking much more closely at so-called Islamic investment mandates. So they're looking to appoint very large Western fund managers to set up equity Sharia-compliant stock funds. Now, what does that mean? It just means public equities that pass certain financial filters. So no vice industries, for example, alcohol, gambling, tobacco, etc. They pass certain financial filters such as, less than 33% of their balance sheet in interest-bearing debt. These are all arbitrary filters for the time being. So they're certainly looking at those mandates much more clearly now. And I suspect that might be something to do with long-term pension plans for local populations who want to have their long-term investments in stuff that is generally in line with their faith. Now, we're not at the stage yet where those governments and sovereign wealth funds are aligning the concept of sound money with Islamic principles. But I think what Alan and I are proposing is that they are fundamentally very closely aligned, and Islamic finance naturally falls out of a Bitcoin standard, even if you're not Muslim or not Sharia sensitive. And I'm actually very careful not to use these words in my own business. I try and avoid the Arabic words and using the word Islamic and Sharia compliant. It's just good business. It's just ethical. It's just based on a sound and healthy economic practice. So to the extent I tend to use terms like risk sharing, profit sharing, real economy backed, asset backed. These are healthier ways to describe this sort of business. And I think ultimately, when governments start to realize that the principles they have, or perhaps the principles, the ethics that their population have according to their faith, are very aligned with the concept of sound money, that's the point at which I think they'll start to move towards aligning Bitcoin and Islamic finance. At the moment, Islamic banks are very much, frankly, reverse engineering of conventional Western banks. There's very little difference between them, apart from the smoke and mirrors, Arabic words, and so on.
You guys write about in the report this relationship between the manager and the investor, and you talk about one of the more popular instruments of Islamic finance, the Sukuk, which you referred to earlier, Harris, the Islamic bond. Explain that a bit more and how that looks like in the manager-investor risk-sharing context. Dive deeper into this risk-sharing concept.
Yeah, so again, about 20 years ago, when we were setting up the Deutsche Bank team, the Dubai Ports Authority was in the process of buying P&O, which was Britain's largest port operator. And this acquisition was going to be financed by a very large tranche of Islamic financing. Now, we proposed that $3 billion of the $10 billion funding should be done via an Islamic bond, via Sukuk. And that kind of financing had never been done on that scale before. And to make matters even more complex, because of the nature of this transaction, we decided that it should be let me get this right, it was a zero coupon, pre-IPO, Sharia-compliant, exchangeable, right? So there's like 4 levels of complexity in there. And of course, our salespeople at Deutsche Bank said, "Oh, this is crazy. There's no way we're going to place this." But we did it in the end. We issued it, and actually was subscribed 4 times over, so heavily oversubscribed. So that was the beginning of an international benchmark-sized market in Islamic bonds used to finance M&A activity and infrastructure and so on. The way we tried to do it in those early days, and we were young and idealistic, and we believed in the principles of fair economic practice, and we wanted to implement Islamic finance in the purest way. So we used an underlying structure which was very risk sharing. The idea was that investors would buy this bond, this Sukuk, and that Sukuk would be used to finance something real, these ports operators, and they would own something real, like the cargo handlers and so on, and they would earn a return from this company being IPO'd and the activities of that company, which is all very fair. It's all real economy. It all sounds very good. The problem was that over time, despite our sort of initial ideological motivations, the industry decided this is just too good an opportunity to pass up. And we can end up scaling this up very quickly by bringing in all the conventional investors as well as the Islamic investors. And in order to bring in the conventional investors, let's make sure this looks as near as possible to a conventional bond. So we started introducing additional contracts, like something called a purchase undertaking. And this purchase undertaking was a guaranteed buyback, saying, I, the person who's taking in this money, agree to pay you this money back in full. Now that's just a loan, right? So you got this loan with this coupon in the middle of it, and this coupon is very closely benchmarked to a UK gilt or a US Treasury. And now it looks very little different from a bond. So over time, it got diluted, and now a Sukuk looks very much like a bond. It looks like a constant stream of coupon payments, and it's extremely closely benchmarked to the bond yield. So that is essentially how today a Sukuk works, but that isn't how a Sukuk should work, because the essence should be real asset backing, performance of the underlying, not some come hell or high water, you just pay me an interest rate, and some backing by a real trade. So we have this sort of disconnect at the moment.
You mentioned Flux and how it might take some principles from what we're talking about before, about more of a risk-sharing model. Explain this in the context of the report that you guys wrote.
Yeah, absolutely. So I'll skim over some of the more technical details of how we want to deploy, and I guess why the opportunities exist in Bitcoin, because we could very easily get bogged down in that. Suffice it to say that there are opportunities to deploy Bitcoin effectively for some or other kind of yield, right? To deploy it productively, in particular where the companies are fundamentally using it, right? They don't just want to put it on their balance sheet and watch it go up. Typically, Bitcoin companies, like exactly the kind of startups that Axiom would be investing in, they're structurally extremely leveraged to Bitcoin anyway. So they have Bitcoin treasuries typically, but they don't need like even more Bitcoin exposure. The point is almost the opposite. It's that they need Bitcoin for something operational, and their only way of getting it is issuing more equity than they would otherwise and then spot buying Bitcoin. So what we're trying to offer for them is basically just capital efficiency. It's like, we'll give you the currency you actually need on terms that are relevant to what you're using it for. So that's as much as I'll say in terms of why the deployment need arises. But in terms of where the overlap with Islamic finance comes in, that's more to do with how we structure I'll say lease, just to be as specific as possible, because I'm deliberately very pedantic about this, that we don't loan the Bitcoin, right? Because exactly as Harris has just explained, that's obviously against principles of Islamic finance. Where I think it's super interesting that this overlap even exists, though, is that we're not avoiding a loan because it's haram. it falls out of thinking clearly about what we're doing that we should avoid a loan. And part of the reasoning is effectively the same reasoning that makes it haram. And it effectively comes down to, I guess at the very root, the inability to print Bitcoin, unlike fiat, right? So we have a very different incentive structure. You could think of it as we have a very real and accurately price cost of capital. That would be another way of approaching this, in that we're very conscious of losing the Bitcoin, right? Like, we have to, for the use cases we have in mind, we have to give up custody for this to make sense. The recipient has to have custody to use it in the way that they want to. And so that for us, and ultimately for our clients, more importantly, is kind of the ultimate risk, especially in a period of Bitcoin still monetizing. Giving up custody and risking losing 100% is crazy. And so what falls out of this pretty naturally is that capping our upside in these deployments is just foolish, because we want, in order to compensate for taking that risk. I mean, you could make the argument that, okay, you can compensate for it by thinking just in terms of a payback period. And, therefore something like, I'm just making these numbers up, but 40%, 50% interest maybe gets us there because we get our principal back as quickly as possible. But that's clearly insane, because you remember the setup I had at the beginning is we're trying to make these companies more capital efficient. If I say, I'm going to give you a 50% interest loan, by the way, in Bitcoin, you now have fixed outflows in Bitcoin. No company will accept that, because that doesn't solve any problem for them. So the way that we kind of square this circle almost is that we need the payback to be variable, which is another way of saying, actually, just to put it back in the language that Harris was using, we need to share in the risks. Now, on an individual basis, that you could argue that is just as risky. Like, okay, we have more of a venture-like exposure to the upside of these companies, but we could still lose a Bitcoin. But the key is that we're doing it across a portfolio. So if we have, again, just make these numbers up, say we have 10 or 20 or something deployments, it's possible that one of these we will lose. We have to emphasize that, by the way. Like, this is not risk-free. If anything, it's deliberately embracing the risk, but trying to get as aligned as possible, given that risk is necessary. And I think that's kind of a nice point to end on, because functionally, all economic risk is necessary. There is no such thing as a risk-free rate of return in reality, right? There is in fiat, because they can just print money. In reality, there isn't. And because Bitcoin is significantly more grounded in reality than fiat can ever be, we have to adopt that approach to adequately match the risk and return that we want to take.
Yeah, because the risks, you can kick the can down the road, and you move the risk up to a higher societal level on a really long timeline. So you guys have a very interesting section here, which I think a lot of the Western world doesn't appreciate this, that the Islamic world has this system of scholars and discourse around halal, haram. And this is where Bitcoin comes in, because as I understand, there has been some debate, perhaps ill-informed, about the concept of Bitcoin being halal. And you include a hadith in the report, which I thought was really interesting. Harris, can you explain why Bitcoin is halal? Maybe respond to some of the common criticisms. I also find this hadith very interesting, because I think this is at the heart of what a lot of the discourse is around.
Yeah, so a hadith is a prophetic tradition. It's a saying or action of the prophet, and it's a clarification, if you like, of the Quran itself, which is a thick book full of ethical principles in it. And then the hadith set out how one applies those ethical principles through practical examples. So you're referring to hadith. Are you referring to the price fixing one, or are you referring to the one about spot trading?
Ubada bin Asamit and Mohammed met at a stopping place on the road, told them the messenger Allah forbade the selling of gold for gold and silver for silver.
Okay, so that's the hand-to-hand, right?
Yeah.
So this particular tradition is saying that whatever qualifies as money, whatever it is, whatever you use as money, you may only exchange it value for value. You can't exchange it at a higher value. So if I give you X grams of gold, you have to return X grams of gold to me, not X plus a tiny bit more. And the same goes for the other particular commodities that we'll mention. I think gold, silver, dates, wheat, barley, salt were all given as examples of money. And essentially, this hadith is saying, that you can't make money out of money because it creates an injustice on your fellow man. And so that's often taken by some readers who are, in my opinion, misinformed as saying, these are the only 6 types of money in the world. And God has said you can only have, well, that doesn't make any sense. I mean, salt, dates, barley, wheat, these are perishable items. They're not even good forms of money. They may have been used as money at one point. We've used seashells as money. Prisoners of war in World War II camps have used cigarettes as money. Money is whatever society deems it to be. Money is whatever custom and usage says. And Islam accepts that in its scriptures. But there are ways in which we can ensure that money is good, is sound, is hard money. And Islam also encourages that. So there's another hadith, for example, that discourages price fixing. And of course, manipulation over money is a type of price fixing. So if a central bank can print more money, then that is manipulation, and that is not. That is centralization. And centralization is frowned on in that particular hadith. And that particular example is where commodity prices were soaring out of control. There'd recently been a famine, and the people approached the Prophet and asked him to fix prices. And he went away and considered this for some time. And he came back and said, I can't fix prices for you because prices are in the hands of God. And if I were to do that, I would create an injustice on you people. So I think that's a really profound, actually, reading of this, 1400 years ago. This move away from centralization. And I think by analogy, we can say that neither are we restricted in the types of money that we can use. They're not just those 6 items, but also we shouldn't attempt to control and fix the prices of money. Money is just a medium of exchange. We know what it's used for, and it's used to acquire real goods and services so that they may pass between hands. And it establishes a fair price for those goods and services. So that's a very Islamic concept. So when scholars say, oh, Bitcoin is haram, it's impermissible, they haven't really thought this through. And they give you the usual FUD. They talk about the things that we hear about elsewhere. Oh, it's terrorism financing, and it's money laundering, and it's, it's energy, it's bad for the environment, and it's not sanctioned by a government. I mean, none of this makes sense. None of these are required by Islamic principles. For some reason, the scholars who say this have decided they're experts on the monetary system as well. And so they give you all of this FUD alongside some, quasi-theological reason. And then they say, therefore, it's haram. But those scholars who have examined it very carefully from first principles against the first principles of the economic system in Islam invariably reach the conclusion that actually this is a sound form of money, and it aligns very closely with Islamic ethical principles. So the savvy ones are now saying, not only is this not haram, it's completely halal, and it may well be the best thing since the gold standard, which traditionally was the Islamic dinar, the gold dinar was the standard used by the Islamic world for 700 years when Europe was still in its dark ages. And actually, I've joked to Alan about this in the past and said, your book was called Bitcoin is Venice, but actually you should have called it Bitcoin is Baghdad or Cordoba, because that's where these ideas and concepts originated into Southern Italy.
In my defense, I do say something to that effect in Bitcoin is Venice, but yeah, my joke answer back is Bitcoin is Baghdad is the prequel to come when I can find the time to write it in maybe 20 more years.
It might be fun to end this on kind of some bull posting, if you will. And I want to go back to this Islamic golden age and the dinar. You write a lot about this concept, Alan, but I would invite you both to just, imagine what something like that in the future might look like, given Bitcoin, and what does an optimistic model for the future look like?
I have quite a lazy answer here, but I think it's rhetorically effective, which is this question is exactly what led me to Islamic finance via the route I described right at the beginning. And the reason I'm saying this is lazy is I'm grateful that I don't need to invent all of this, right? It already exists. It's existed for hundreds of years, and you just need to, well, you could say you just need to look at it. I'd maybe push a bit further and say it is worth understanding why this connection exists. I believe it's more or less as simple as this is what follows from sound money if you are forced to take the soundness of the money seriously. But we don't need to reinvent it. We can just accept it. It's there. Just embrace it.
I think that my faith requires me to try and be optimistic. That's actually something that's encouraged in my faith, is to be, no matter how tough your life, how hard things are, how bad the economy is, how bad your job is, look to the future and have low time preference and have resilience and have patience. And these are all Islamic concepts. These are characteristics that are admired in my faith. And I think a monetary system that encourages deferred gratification, saving and investing for the future, and sustainability, and by its nature is actually good for the environment, not bad for the environment, that creates a sense of stewardship over our planet. These are all things that are very well aligned with the concept of optimism, looking to the future. So I think that this idea that we negate the ability of money to be a tradable commodity is one that is really healthy, long-term thinking for society, and one that completely aligns with my faith and actually many faiths. But we've sort of lost that, connection between business and ethics over the years. And I very much hope that introducing a sound money standard, particularly a Bitcoin standard, is one that's going to put us back on the path of hopefully protecting our planet. We've had the last 100 years, the most bloody and environmentally destructive century in history. And I believe that fiat money has everything to do with that. And when we restrict the power of governments to print at will, I hope we can reverse some of that trend.
So let's wrap this up. You guys put this conversation or this research out recently, just a few weeks ago, I believe. What's been the response, particularly from the Islamic world? And has that caused you guys to think or any of your thoughts to evolve or spurred new interest for research and writing?
I guess I'll kick off very quickly. I think it's probably too early for us to say what the response has been. I know that Alan is going to present this at Bitcoin MENA in December. It'd be interesting to get some feedback on that when he does. We have been banging this drum for a long time, but not many people are listening yet. But having said that, I am starting to pick up, because I picked up that large Western investment banks and institutions are now working on Islamic fund mandates for sovereign wealth funds in the Gulf. I very much hope that next on their agenda, we'll be looking at sound forms of money. And if we aren't already too late, because, fiat money has such a powerful hold on the whole world, and probably the greatest trade the US ever did is the buying of oil in dollars and the financing of this through US treasuries, which is a self-perpetuating trade, a very clever, fantastic, probably one of the world's greatest trade. If we can get away from that, then we have a chance of reverting to a sound money standard in the Islamic world.
Yeah, I'll just add, I just realized we actually didn't touch on this earlier, that part of the reason, actually maybe the entire reason that Harris and I even decided to write this, we'd been talking about it for literally years and years before we got to work, is the realization that no such resource really existed. There's kind of a scattering of a few resources. There's a couple of relatively popular Twitter accounts that this is kind of their whole shtick. I did a talk at Baltic Honey Badger more than 3 years ago now, which is actually very difficult to find because it doesn't even exist as a standalone YouTube video. You have to send somebody a link where it's like timestamped to 6 hours in. Harris has a now legendary LinkedIn post, but that's the same kind of thing, because like no one we really want to reach, I think, is either on LinkedIn or takes it all that seriously. So it was kind of the recognition that we're pretty sure we have all the right ideas here. They just don't exist in a form that is readily shareable. I bring this up partly because, the audience might find the history of the writing of the paper interesting, but also just to point out, on the one hand, within the Bitcoin community, I think people are kind of sick of us talking about this because we've been talking about it for 5 years. But on the other, what we're really hopeful for is that now we do have this resource, and especially as well that we had it professionally translated into Arabic. Now that this exists, it can hopefully be spread outside of the Bitcoin community to the extent there is such a thing. And as Harris says, it's very early in that process. So we'll see how successful that is.
Harris, Alan, thank you so much for coming on Blockspace. I will link the report in the description. So if you've made it this far, make sure to actually read the report. It gets way deeper into some of the high level stuff and the stuff we didn't get to touch on. Thank you both. And maybe I'll see you and Mena.
Thank you.
Thank you very much.